Hey, what's up, everybody? Welcome back to today's February 24th, 2020. My name is Pete Renzulli. Welcome back to Stocks for Breakfast. Some pretty serious stuff going on today. The coronavirus has spread, and I'm going to go right to the charts and right to the screen to give you an idea of how serious it is. I'm going to show you a big headline from CNBC today. But we're also going to get into some very unique setup that's going on in Apple today, as well as a few other stocks. But before we even get into that, I want to make it clear today is all about damage control. Don't overreact on some other positions. We've been up, and many people say overbought. So a pullback, for whatever reason, has been coming. I'm not going to say overdue. It's certainly something that most normal stock markets have, and it's not necessarily the end of the world. It's really nothing more than a part of what actually happens. Markets go up, you get profit taking. Markets go up, you get profit taking. We just happen to be getting a extreme example right now because of coronavirus spreading outside of China. One quick note, if you find this video or any of the other videos helpful, please do me a favor, click down, subscribe so you get updates to forthcoming videos, especially the Stocks for Breakfast. We seem to be getting a lot of good feedback off it. So I'm going to go right over to the charts and give you an idea of exactly what we're looking at right now. That's how bad things are right now pre-market. It's 6:30 in the morning here on the East Coast. Dow Jones down 850 points, which is a monster move, especially in this bullish market. However, putting things in perspective, what's really important right now is that all we've been talking about is getting the distance between a potential entry price and a potential profit target to expand. What we were getting in that market that just kept grinding higher and higher, this wasn't expanding. We weren't seeing a difference significant enough to start to feel that we could be aggressive with initiating new trades. As a matter of fact, it felt like a lot of new trades were 1-to-1 risk-reward ratio, where because we were going higher and you only could be looking for a new long, meaning the shorts weren't really the greatest idea in the world, you didn't really feel like there was a lot of profit potential between your entry and the profit. Obviously, with this massive separation now and the move to the downside, we're going to have some opportunities today to get long. So we're going to shoot straight over to the charts. One thing I want to point out, though, is that you don't want to buy just for the sake of buying on an intraday time frame, or especially if you're on a little bit longer time frame to look for a spot. You want what's known as a bullish reversal. You want whether it's a 5-minute chart, a 15-minute chart, or a daily chart. I'm speaking to active traders on different time frames right now. You want to be able to say, at least it stopped and reversed, and I could see my risk. If you see red candle followed by red candle followed by red candle, don't guess about them. That's actually a foolish thing to do. What you want to see is you want to see it trade lower, and reverse. And in my vernacular, that's called a bullish U-turn. So in other words, we'll trade, if this is today's candle on the daily chart, let me actually expand that a little bit more. We're going to trade lower, reverse, and then close above the previous candle. So that's what we're looking to see today. And then what does that do? Does that mean it's absolutely stopping there? No, of course not. But here's the key. It gives you a risk point to look for a spot to buy. If you're just buying as it's going down and you're seeing it's well offered. And what I mean by well offered is simply that you have lower lows, lower highs, and even more succinctly is well offered with closing near the lows. And I'm going to get into a couple of stocks that actually have some opportunity like that today. So what you want to see is a place you could manage your risk. I can't stress that enough. Today is about being super focused on what you need to see to take an entry today. There's going to be entries that are going to be had today. Some of them might work, some of them won't. But because that distance is spread now, where there's opportunity to make more money, today is the day. And actually, interestingly, we said it last week, and I said it in one of my coaching calls, that sure, it's aggravating as stocks are going higher and you don't feel like you have like this distance to make money, that the risk you're taking is not really worth it because the reward is not huge. If you're long from the last year or two, obviously it's tremendous. You don't care if it grinds higher every day as long as it keeps grinding higher every day. But here's a super advanced lesson that I want to give everybody. Two, actually. One of them is going to be an Apple that we're about to discuss, but a super advanced lesson that I mentioned in a coaching call last week all of these small losses and small profits that you're making on the way higher, or on some short sales that you like that didn't follow through. I think there were a couple that we said, be careful, they get confirmation. We didn't get confirmation, so the trade didn't trigger. This is when you prove whether or not you have what it takes, or you have the planning in place to get paid. All of those small profits and losses get washed away by a few trades, 3 or 4 trades per month that are big winners because you were prepared for them. So yes, this is a global crisis. I'm not going to underestimate or undervalue how big this is. However, it's still a raging bull market. Okay, so we have to be prepared to start building positions as stocks move lower, looking for them to turn around. There is actually some news today about tech stocks. A tech stock hedge fund manager said he expects a big pullback in tech stocks specifically because of this. That's a different story. Today we're talking in general terms about how to actually turn things around and start to build positions. And I want to say this clearly, and I'm actually going to come back on the screen for a second here. If you don't know, I managed 2 trading firms in New York City for a long time. Probably long in day trading terms, it's a long time. Probably about 15 years. And what ends up happening is traders get frustrated that some days aren't really conducive to making money. And as a trader, you feel like, especially if you're a full-time trader, you feel like you have to do something every day. That's not the case. Don't set daily goals. Daily goals will drive you out of your mind. What you need to do is set weekly and specifically monthly goals. Weekly is good because you can see if you're on track and you have 5 days, if you average 5 to 10 trades per day, if you're an active trader, which is very common. Some traders make 2 or 3 trades a week. The amount doesn't matter. Over a period of time is what you should be focused on. If you watch some of our stuff, you know that 10 perfect trades is the way that we make money with order flow and saturation points. So the point I want to make here is don't sweat it if you're going through a period where you don't seem like you're making progress, especially if you're following the plan, and more importantly, you're taking your losses where you're supposed to, and you're taking whatever profits available. But, and this is a huge thing to learn if you want to be somebody who makes the stock market give you money. When the market pulls back, when the market breaks out and does so with volume, which we've already called energy candlesticks, right? Or fuel, to be a little bit more specific. When those situations occur where there's profit potential and risk that justifies that profit potential, you have to get in there and make what you're supposed to. You can't make $1,000 on a $4,000 trade. You have to make 4,000. Now, the next part of that is actually what I specialize in, which is really understanding how to manage the trade between entry and exit to maximize what you make on those trades. Some trades you should make 1,000 because that's all that's available. Some trades should make 4,000. I'm just using those numbers as 4 to 1, just so you get an idea of the difference. All right. So we're going to go to the chart. So if you learn anything from this video, you have to make more when more is available. And again, that's what I specialize in. And hopefully you're watching these videos. I can keep walking you through that. So the one thing I want to talk about here in Apple today, which is very, very interesting, is you'll see here in Apple, we actually have this trading range right here. We have this trading range right here. Both of those continued very smoothly. You get a nice push up, you get a nice tight trading range. In our vernacular, in the way that we talk about that stuff, that is still bullish environment, still a bullish environment. Institutions, the smart money as we call them, has not started to sell stock yet. They're still doing things quietly. They're still advancing the stock. Did it once, did it twice. Now what's going on up here is different, and I'm actually going to highlight this color here just to really bring this point home. What's going on in Apple now is what is known as a distribution. Distribution happens in wide fluctuations after a significant push to the upside. Now, why does that happen? Why is this different, even though it's still a raging bull market? Right? Why is this different compared to this one and this one? This one here is smart money selling while prices are still high. It's pulling back, they push it back up. What they're actually doing is they're letting price move a little bit more to do exactly what we just said before, where there's a bigger distance now to make profit from where it just came from. However, this is in a trading range as opposed to 3 to 5 days of well offered where it's pulling back and the uptrend is still established. Now, in this case here, the uptrend is still established. However, what I want you to do is print this chart out and remember, tight trading range, Stocks are not for sale yet. They don't want to draw too much attention to the stock. Whippy trading range, back and forth price action, a lot sloppier than these trading ranges, is known as distribution, which is when institutions, smart money, are selling stocks. So I just want to make that clear. Great example here in Apple. Now, although the market's pulling back today, we do have some stocks, as I taught you last week, we're going to start making sure we pay attention to on a daily basis, stocks that were relatively strong for relative strength plays the next day, because you want to go to the strongest stocks first if you're looking to be a buyer as a good trader. You don't want to be looking to buy weak stocks saying, oh my God, the distance between where I could make a profit and where I'm buying is tremendous. No, stay away from weak stocks on the long side. And the long side means you want to be a buyer. The short side means you want to be a seller. We want to be looking for longs. We want to be looking for spots to buy first in stocks that were strong, with the mark being weak last week. So the first one we're going to take a look at is Zillow. Zillow is continuing to go. Now, again, a lot of these stocks are going to be opening lower. That's not the point I want to get across here. What I want to get across here is the fact that the stock was strong when the market was weak on Friday, just from a daily basis. Okay, that's a very micro picture of what you should be looking at tomorrow. And then you could add to that, which I'll show you right here. This is well offered. And then this is well offered, meaning higher highs and higher lows. Something I also brought up last week is an inside candle after a breakout is not a breakout that you want to trade. Now, we got other macro stuff going on with the coronavirus today, but my point is the very first thing you should be looking for when you start to do your scans is, was the market strong or weak today? Let's just use as an example the market being weak on Friday. Market being weak on Friday, now you go and look to see which stocks were strong on Friday. That's the minimum criteria. You want to say, okay, those are stocks that I want to consider because the smart money was what is known as holding the bid. Holding the bid means while the market was going down, there were more buy orders, smart money buy orders underneath that stock. So Zillow happens to be one of them. Now you can expand that to, was it well bid, meaning higher highs and higher lows, in addition to being strong when the money was weak. And then you can use order flow as well. So in other words, longer term, week, month, quarter, also strong. So you start to, remember we said you want to add to that argument. The stronger the argument for accepting risk, the greater conviction you should have in your position. And again, if you're hesitating, if you're doubting, if you don't believe in your positions, it's because you're not doing this kind of stuff where you're not building a strong enough argument to say, absolutely, there's a reason for me to accept risk right now, and here's all the reasons. If the only reason you have is I could see a stop loss, that's a weak argument. So again, if I could continue to show you how I taught my traders in New York City, and we had 300 of them at one point, it really comes down to you will be in position to make money on a monthly basis when you learn to make good arguments for accepting risk. So Zillow fits the criteria, and a long forgotten stock, eBay, actually, not in bullish order flow, good recent momentum, has some resistance here at 38.50, 38.75. So not necessarily a buy. I'm just pulling it up as an example of a stock that was bullish on Friday. Market was weak on Friday, but this does not have profit potential. So you see how like we're putting the opportunities together? It's not, well, Pete said it was strong on Friday, so I'm going to be buying it. That's not what I'm saying. Now you got to add to the pieces. You got to add to your argument. Remember, what's the distance? How much can I make? Should I accept risk in exchange for what I think I could make? We also talked about last week was how long has buying been going on, and this has been going on for February. So roughly 30 days of buying. Actually, today's the 24th. 24 days during the month. I know it's not the amount of trading days in the month, but you get the idea. Versus where you're looking at a stock, let's say like Nvidia, for argument's sake, where there's been buying for months, going all the way back to last summer. Okay. So again, I'm just using eBay as an example. I like Zillow a little bit better, but again, we're pulling back today. And next one's actually interesting too is Philip Morris, not the sexiest stock in the world, but we are looking at close to multi-year breakouts up in this 92 area. So we're around 89, probably going to open lower with the rest of the market, but definitely set an alarm above this level. Now, here's actually a big thing too. When a stock is having a lot of trouble getting through an area, you want to know, because when it finally, and if it does finally punch through that level, it usually explodes through that level when it finally does. You don't want to have your alarm set at 92, which is below that level. You want to have it set like 92.50, 92.75. don't get alerts when it's hitting the resistance that it can't get through. Get an alert when it finally gets through there. Now it should perk you up. Now it should make you pull it up. Professional tip, the way we did it in my office, was if you really like a stock at a certain level, put a 100-share buy stop up there if you want to be a buyer. Get filled on 100 shares. So now it's in your position summary, and now you're really paying attention to it, because there's a, in case you don't know, there's a monster difference between watching stocks in a list and feeling like you know if they're strong or weak versus actually owning the stock. And it could be as little as 100 shares, but now you're watching that thing go up and down, and you're like, I know that stock better than anybody on Wall Street because I'm in it. 100 shares is a good way to do that. Next, we're going to talk about some stocks on the bearish side. Again, bearish means stocks going down. NTAP is an interesting one for a couple of reasons. Number one, a tech stock that's weak while the tech market is screaming to the long side. We just had this consolidation here after a gap down. We had really no resistance, kind of what people call minor resistance down here at 49, and then the ultimate resistance down here somewhere between 44 and 45. So roughly, ultimately, about $7 to the downside. And what's interesting here also is we're just pulling out of a consolidation. So we basically had a gap down, basically an overreaction to the gap down, a little profit taking there if somebody happened to be short. 3 days of consolidation and what I call an energy candlestick, a bearish energy candlestick to the downside. Now, again, I'd like to call energy candlestick is a large red or a large green candlestick. A fuel candlestick is when it's coming out of a consolidation. This is coming out of a 3-day consolidation, not really so much of a consolidation, but it is 3 days of consolidation. So long channel consolidation would be fuel. This is a solid energy candlestick to the downside. So we're looking to initiate a short sale for all of those reasons. Weak while the market's strong, weak while the tech sector's strong, and actually breaking down now after consolidating. We might see a little bit of support here. I don't really think that much. And then the ultimate target is down in this 45 area on NTAP. Next, we have one that's been in the market as very tradable for a while now. It's got good volatility. We're looking at Roku. Roku is actually consolidating after it just pulled back. This is actually a big lesson here as well. Yes, it looks like it's breaking down here, right? Absolutely, it's getting involved. No, the stock just came from what's the high here? 151.20 to 119 and change. Okay, that's a monster move over a few days, over basically 5 days. We need this stock to consolidate right now before we look for this stock to punch down and look through this next level, which is right around, what's the low here? 98.69. So let's call it 99. So we want to see a consolidation here for a couple of days, which we're probably going to end up getting. Maybe we'll open lower with the rest of the market, but I'm not short selling this breakdown for the reason I just told you. Remember what I just said? How far has it come? How long did that happen? It just got crushed. It broke through support. It should consolidate here, and then we're going to look for that $20 profit potential on the short side. So again, setting up the tracking journal, looking for trades to the short side, and this fits the criteria. But remember what we said. Is it a buy or a sell? So let's just use sell as an example right now. Is it a sell? Yes. Is there order flow? No. So we're only trading the most recent price action, so that lowers our share size during the trade. Remember what we also said, all trades are not the same. Yes, it's a good opportunity because of the recent pressure to the downside. The selling has been vicious over the last 5 days. But because there's not a long history of selling, at least a quarter from one earnings report to the next, we have to manage our risk and our share size properly, which in this case means lower because the argument's a little bit weaker. It's still strong, but a little bit weaker. Waiting for the pause, waiting for the push down. So remember, if you take anything out of these videos, how you decide to get into a trade is based on the argument, which in my case is order flow, saturation points, and room to go, meaning how much profit potential is there. And then how much proof do you have that they're selling or buying in that stock? And that proof is easy to see based on how much selling or buying has been done recently. At a minimum, to have a lot of conviction, you should be looking quarterly, because that's obviously stocks report quarterly. In this case here, we have 5 days. So it's still a good trade based on the recent price action, but we want to see it push down, pause, which it did. Now we need to see the pause. Last, we have RCL, and this is an interesting one too. Very similar to what we just looked at in Roku. Obviously, the stock has a little bit more history. We're going back to the breakout in mid-January where the stock absolutely got crushed, and we continue to push lower. And you can see we got some support here right around, actually, I'm going to lower this a little bit. So you got double support here, right? No, you got actually more support. It seems like every time it gets down to this level, it's stopping right around the 102, 104 level. However, you can't ignore all of this selling while the market's actually strong. So what's actually most likely going to happen in this stock is we're going to punch down to 102. Not really worth $4 here after the stock has really just sold off 12. What I'm game planning for is the stock to get down to this 102 area, pause, and then show us a energy candlestick through that level, because the next level is all the way down here at 88. So again, I'm not short selling it today. It's going into my game plan. It's going into my tracking journal, looking for it to pause at 102 for all the reasons that we just gave, same as Roku before. This has a little bit more short selling history. Again, smart money, how much money did they commit? The more money they committed that you can see obvious on the charts, and you see that by time, the more confidence and the more conviction we can have in our trades. So those are the trades that we're looking at today. Look at some relatively strong stocks that showed some buying pressure when the market actually sold off a little bit last week. Just to mention a few, John Deere actually was actually strong on Friday as well. Had a breakout through some pretty big levels. So pay attention. You got Deere, Tesla, Walmart, Amgen, and Caterpillar. And the reason, again, if you happen to be tuning in later in the video, we're looking for stocks that had relative strength on Friday. Very first micro time frame that you want to look at is a complete daily chart and say, what did the market do yesterday? In this example, the market was weak, closed on the lows or near the lows on Friday. We're looking for stocks that close strong on Friday as the minimum criteria for stocks that we would look for. Then you use more criteria to say which stocks actually have longer term order flow or longer term momentum, and you start to build that argument. So that's the stocks for today. Coronavirus is all over the markets today, the global markets, not just our markets. It finally hit our markets. Be prudent looking for bullish U-turns before you start to enter any trades today, so you have that risk point. That's a smart thing to do. Show yourself you're a smart trader. And we'll see how things unfold. We'll pick it up again in tomorrow's Stocks for Breakfast. So that's the end of today's Stocks for Breakfast. If you found this video helpful, please do me a favor. You will thank me for it, and I will thank you for it. Subscribe and hit the alert button so you get alerts the next time that the next video comes out, usually 2 hours before the market. Have an awesome day and good trading. Be super disciplined today.